Good afternoon, MMTs, and every one of our traders around the world and the United States. One thing that I'm going to bring to everybody's attention is we have this 15-year top in the Nasdaq composite, and I'm going to go through these things with you because 15 years ago, here we go, here's the S&P. Now, granted, this is all a monthly chart. And what I am saying is that I'm just going to warn everybody that this particular tech boom or tech bubble is actually going to turn out to be worse than what we had in previous tech bubbles. As far as the S&P 500, this thing has gone straight up 67 months. We've been in this rally from one of the worst pullbacks that we ever had. And yes, it was on sale back on 3/1 of March 1 when that S&P hit a low of 666.79. We're about 67 months into this big rally. And I just want it on the record for the investors or whatever that try to buy and hold stocks. Listen, man, I was there in year 2000. And I am calling for that. I didn't say that this is going to happen right away. But I am saying that it will happen. And so, once again, on the Nasdaq 100, and I had covered this yesterday. This is the Nasdaq 100, and it went straight down 15 years ago, and nobody ever thought that we would go back to 1996 levels, straight up parabolic and straight down parabolic, and then the confidence had come back in here at the bottom of March of 2002 and popped that baby up there. And I can say right now, this isn't going to happen immediately. But what I am going to say is that as far as the economy goes, yeah, it's firmed up okay. But we are in a tech bubble. And these bubbles could take anywhere from 6 months, 9 months to a year. Going forward, here is the Dow Jones Industrial Average, and I have a yearly chart, and I'm just telling everybody, yes, we're about 67 months into it. 1975, we started a rally up here in the 1976, and therefore I'm going to show the Dow has gone parabolically straight up. We went parabolically straight down in 2008, and we're 67 months into this. So therefore, the profits that we've had are not quite as good or as robust as they were. Now, I'm not saying that this is doom and gloom right now, this very minute, but I'm going to put it out there because people who do understand that 15 years ago was an extreme bubble. Now, this particular bubble here I'm calling for has been all artificially stimulated with QE printing money. The rest of the world is printing money as well, so they're late to the plate. We're going to have QE3 programs around the world, just like the United States did. And you can take a look here at that bottom of 2009 on this monthly chart. We went straight up right there. Yes, and there was times back here at the top of this market here in the Dow that, my friends, this was a extreme bubble. And we came down. And you can come back here to 1995 and 1996. We went parabolic up. And we had an extreme differences at the time. Our economy was never stimulated with the Federal Reserve with Alan Greenspan in there, but look at that long rally. Now, back in year 2000, it started like this. And yes, the Dow Jones is a different breed of stocks. I grant you that. However, with this Nasdaq composite, you can take a look at this. This is a bubble right here. And yes, it takes time for bubbles to pop. The euphoric part of this, the exuberance that we have here today is that the Nasdaq related 100 stocks and the heavy technology stocks, they've been running in anticipation here 67 months later. Here we are in 2015 at the top, and I'm showing the depth of that. The depth of that year 2000 top bubble had come right back down here, and it tested where we went parabolic up. But every time that we've had these rallies up here, they have miserably went down. And this one here started in March of 09, and ironically, it's March 5th, 2015. Now, everybody, I'm not saying that this is just going to happen right away, but I am saying that as we go through and bring more money off of the sideline, we are going to get more of a top that will explode mathematically. Everything is based on math. Everything is based on math, from the Federal Reserve, from the stimulus, from the banking sector, the printing presses that are working around the world. Listen, it's going to end up in a bad way, and we have rallied back all the way up here. And there is a bubble because it was artificially stimulated with capital, and supercomputer machines ran these in stock straight up. And listen, we've gone the course. And I'm saying that during this summer and this fall, going into calendar 2016 and thereafter, is that there's going to be periods of big pullbacks. Yes, it'll take some time to get the money off of the sideline around the world, but once that money is off the sideline around the world, there's going to be a very big problem. Once again, here's the Nasdaq Composite, year 2000. We went parabolically up. That rally here was not that big of a rally, and it started in March. We were there. We've been around 30 years, and then popped. And then you can see that same bubble. Yes, granted that there is more entrepreneurship and more tech companies coming out all of the time and whatnot. These markets are not cheap. These markets are more expensive than they were in this last big bubble. Here they never actually had any core earnings. But I can say for one thing, they always end up in a bad way. And I just want everyone to understand that. We shot. Look at that S&P. Look at this S&P. See, back in 1999, when the S&P came down, we rallied up in the 500 stocks in the S&P, and the earnings were not stable. So on this first pass right here, you can clearly see what has happened, and you can clearly see the 67 months straight up to that top. Now, it takes a while for a bubble to pop. And unfortunately, the United States has used all their stimuluses, so they're going to depend on who? They're going to depend on Europe and other worldwide economies to start their QE, and that the United States market is not cheap. However, if you want to go to Europe, you want to go to Japan, you want to go to these other countries like Mexico and whatnot, and those markets are cheap. Yes, and UK and London and Europe, I mean everywhere, that QE programs are going to start. We've already completed ours, and when we took out this monthly resistance level, it started right here in 2013, as you can see. And this is the S&P 500. And I'm just giving the warning right now that as we move through the rest of calendar 2015, there will be a big pullback in the summer months, and the volume is lighter overall. And it's very, very important that people understand markets were on sale over here. And you can see these double tops, and you can see that S&P burning. Back over here, this was in this was April of 1996. That's when we had that big rally. And every time our economy gets into a problem, there's always a relief rally. And nobody ever thought that this S&P 500 would have came all the way back down here And like I said, once again, these were uh, in these years. And so here was that long rally during the Bush administration on a monthly chart. But check it out. We went parabolically down. And what I'm saying is everything was on sale. We are about 67 months into these tops. And these tops are going to come down. And the money on the sideline is going to leave the U.S. This money's been made. So beware, everyone. And I never said it was going to happen overnight. I never said it was going to happen this week. I'm saying that longer term, it's going to happen. And I will not be wrong on these bubble tops that we have.